Hey everyone, welcome back to TalkTickers.
Today, we're going to do a deep dive into 3M's Q3 2024 earnings call.
Yeah, should be fun.
You know, we always try to bring you the most important insights from these calls and help you make sense of it all.
We've got a lot to unpack today.
We've got the transcripts,
Yeah.
the presentation slides, and that press release.
Full shebang.
So we're really going to dig deep on what's going on with 3M this quarter.
All right, so let's start with some of the big numbers.
3M actually beat what the analysts were expecting this quarter.
That's right.
They reported adjusted EPS of $1.98.
Yeah.
Which is an 18% increase over the same quarter last year.
Wow, that's a big jump.
And their operating margin also got a nice little boost.
Hit 23%, a 1.4 percentage point increase year over year.
That's really solid, especially when you think about all the headwinds so many companies are up against right now.
For sure.
And it was strong enough that 3M actually raised their guidance for the full year earnings.
Yeah, they're now projecting earnings between $7.20 and $7.30 per share.
Oh, wow.
Up from the $7 to $7.30 range they had before.
Okay, so they must be feeling pretty good about the rest of the year then.
Definitely seems like it.
But I'm curious,
when you look past those headline numbers,
what else is going on here?
Well, for one thing, even though total sales only saw a small year-on-year increase,
organic sales growth was a full 1%.
Okay.
And I think that 1% growth is even more impressive when you remember what 3M is calling
portfolio geographic prioritization.
Right. Basically streamlining,
Which, obviously, there are some headwinds that come with that kind of move in the short term.
Yeah, that makes sense.
So they're making choices that might impact sales right now.
But are aiming to make them stronger down the road.
Exactly.
Now, about that 18% EPS growth, they're saying that's because of a few things.
Strong operations, of course, a better tax rate compared to last year.
And some net interest benefits.
Right.
And they're doing a really good job of managing that cash flow, too.
Adjusted free cash flow was a healthy $1.5 billion.
That's great.
With a conversion rate of 141%.
That's key.
Tells you how well they're turning profits into cash they can actually use.
Right.
And a conversion rate that high, that's a really good sign.
So they're making money and managing it well.
But what's actually driving all of this?
What's up behind these good results?
Well, 3M has three main pillars, you could say, that they're using to really change things up.
They're using these pillars to figure out how they're approaching their business.
Okay, so let's get into these pillars.
What's the first one?
Driving organic growth.
Okay.
And that means, in large part, revitalizing their whole approach to innovation.
I mean, they have said that they've had fewer new product launches in the last 10 years.
So it sounds like they're really trying to get things moving again.
Totally.
They're expecting new product launches to increase by 10% this year.
And projecting even faster growth next year in 2025.
That's great to hear.
But it can't just be about the number of products.
Right. It's got to be about where they're putting their energy when it comes to innovating.
You're right.
They're really trying to invest in areas that are growing quickly, like materials for cars, aerospace, and semiconductors.
Those are some hot sectors.
Makes sense to be focusing there.
Yeah.
But what about how they're getting those products to market?
Any changes there?
Oh, yeah.
They have actually been able to cut the time it takes to set up a new product SOP from 100 days all the way down to 60.
Wow, that's a huge improvement.
Yeah.
Sounds like they're serious about being more efficient.
Absolutely.
And speaking of efficiency,
they haven't exactly been quiet about some of their struggles with that in the past.
not at all.
They know they've had issues with on-time delivery.
Which has meant less business and even fines.
Yeah. Ouch.
Right.
But it sounds like they're really trying to do something about it.
Absolutely.
They've been working really hard to get better with their on-time and full deliveries.
They're OT freight.
Yeah.
So how are they doing with that?
Well-
Their Q3 OT freight was 89%,
Okay.
which is 5 whole percentage points higher than it was at the beginning of the year.
Wow, that's really impressive.
Yeah, they're really focused on getting their operations running smoothly.
So pillar number 1 is all about driving organic growth. What's number 2?
Operational excellence.
And this goes way beyond just the factory floor.
Okay, I like where this is going.
Tell me more about what they're doing.
Well, one big focus is safety.
Yeah.
They launched this company-wide program.
Called Journey to Zero.
I love that name.
Right.
What's the goal there?
To completely eliminate injuries in the workplace.
Wow.
Really trying to create a culture of safety.
That's ambitious,
It is.
but definitely a worthwhile goal.
Totally agree.
And they're not just hoping for the best.
They're using data and analytics to improve their efficiency.
Yeah.
You know, we love data here at TalkTickers.
Of course.
So tell me, how are they using it to improve their operations.
They're using data to get better at forecasting and demand planning.
Which, if we're being honest, hasn't been their strong suit in the past.
That's a good point.
Accurate forecasting can make such a difference when it comes to things like inventory management and production planning.
Exactly.
And all that leads to being able to get products to customers on time.
They're seeing some really promising results already, just from these early tests of their new data-driven systems.
That's good to hear.
Uh-huh.
But let's talk about their factories specifically.
What are they doing to boost efficiency there?
They're using a metric called Operating Equipment Efficiency,
Okay.
or OEE, across all their biggest facilities.
I've heard that OEE can be a really great tool for finding bottlenecks.
And areas where they can improve.
Exactly.
So how are they using it at 3M?
Right now.
Their equipment is only being used about 50% of the time,
Okay.
but they're aiming to get to 80% or even higher.
Wow. That's a big jump.
Right.
But it does seem like there's a lot of room for improvement there.
It shows how much potential they have to boost their output without having to buy all kinds of new equipment.
So they're getting more out of what they already have.
Exactly.
Smart.
Okay, so we've talked about driving organic growth and achieving operational excellence.
What's that third pillar of their strategy?
The third one is all about using their money in a smart way.
Making good decisions about how they're using those financial resources.
Okay, break that down for me.
How are they deploying capital effectively?
Well, they're definitely taking care of their shareholders.
In Q3, they sent $1.1 billion back to shareholders.
Through dividends and share buybacks.
That's always nice to see as an investor.
But they're not just focused on those short-term returns, are they?
Nope.
They're also looking long-term.
Okay.
They're doing a whole review of their portfolio,
What does that mean?
looking for places where they might sell off some of their smaller businesses.
The ones that maybe don't fit with their strategy.
Exactly.
So it's all about focusing on where they're strongest
Uh-huh.
and where they see the most potential.
That makes a lot of sense.
Making sure they're using their resources where they'll make the biggest difference.
All right, so we've covered their overall performance.
And their 3 strategic pillars.
But I'm curious how all these initiatives are playing out in their different segments.
Oh, that's a great question.
Let's look at some of those and see how they're doing.
Sounds good. Where should we start?
Let's start with safety and industrial.
Oh,
That segment's organic sales went up 0.9%.
mostly because of how strong their industrial adhesives and tapes are doing.
Yeah, those are used in so many different things.
From electronics to construction to cars.
Exactly.
And they're seeing a lot of demand in those areas.
They also saw growth in roofing granules and electrical markets,
So a pretty good mix of products and markets.
which is good for having a diverse revenue stream.
Totally.
Next up, how about transportation and electronics?
Adjusted sales there went up 2% organically.
Nice. And what was driving that?
Electronics was the star there, really.
High single-digit growth.
Makes sense with all the new devices coming out all the time.
Yeah, a lot of those OEMs are ramping up production to get ready for the holidays.
Yeah, getting ready for the big holiday shopping rush.
Exact.
Okay, what about the consumer segment?
How are they doing?
That one's a little mixed.
Okay.
It's down 0.7% organically.
So what's causing that decline?
It's probably a few things.
The economy, of course, and more competition in some of their key markets.
But they're seeing some good things there, too.
Okay, tell me about those bright spots,
Well, their home improvement business is doing pretty well.
especially the Command brand.
Oh, yeah, those command strips.
I use those all the time.
They're popular.
It shows they can still come up with things people want.
Right.
All right, we've hit on 3 of their main segments now.
Any others we should mention?
Yeah, let's look at China.
Okay.
Even though there are some worries about slower economic growth there, 3M is actually seeing pretty good sales.
Interesting. So they're not too worried about those macroeconomic concerns.
It doesn't seem like it.
What's driving their success there?
Organic sales in China are up 11% so far this year.
Wow.
It's mostly because of demand from the electronic sector.
So they're in a good spot to benefit from that growing Chinese consumer market. And they're seeing good results in other emerging markets, too.
That's good to hear.
Huh.
It shows they're not just relying on those mature markets for growth.
Okay, we've gone through a lot here.
Anything else big to highlight from this earnings call before we move on?
Oh, yes, one more thing.
Okay.
Insurance recoveries.
Right.
They had those legal issues with the earplugs and the water issues.
Yeah.
Well, in Q3, they got $54 million back from insurance for those liabilities.
Brings their total so far this year to $175 million.
That's a lot of money.
It is.
Do they think they'll be able to recover more?
Oh, yeah, definitely.
They're going to ramp up their efforts to recover even more?
And they think those insurance companies will pay up in full.
So we can see more news on that front later.
Probably.
All right, I think we've hit all the major points from this earnings call.
Sounds good.
What do you say we take a quick break?
And then come back and talk about what all of this means for investors.
Sounds good to me.
So we'll be right back.
All right, we're back.
So we just went through a ton of information about 3M.
Yeah, we did.
Their recent performance.
All those strategic initiatives they're working on.
But the big question is...
what does it all mean for investors?
Right, what are we supposed to take away from all of this?
I think one of the most interesting things
is that 3M is really trying to transform itself.
Yeah,
they're not just sitting back and hoping for the best.
They're finding ways to improve and actually making changes.
They're being really proactive.
Exactly.
And I really like that they're willing to admit their weaknesses.
Oh, absolutely.
They didn't try to hide those on-time delivery issues.
They were very upfront about it.
They even mentioned the lost business and the fines.
I know, right?
Which, honestly, is really refreshing.
It is.
It shows they're being serious about fixing things.
And not just trying to sugarcoat the situation.
It definitely builds trust.
And it makes those efforts to get more efficient.
Even more impressive.
For sure.
That focus on OEE in their factories, for example.
That could be a huge game changer for them.
No doubt.
If they can really boost that equipment utilization from 50% to 80%.
That's a big deal for their bottom line.
It's not just about working with what they've got.
It's about becoming more agile and responsive.
And ultimately, more competitive.
Exactly.
It's like they're finding hidden treasure right there in their factories.
Yeah,
and it shows investors they're really trying to find ways to create value, not just focusing on growing revenue.
That focus on operational excellence is a long-term play.
It could pay off for years to come.
There are some of their other initiatives.
Like changing up their R&D process and improving their demand forecasting.
Those are going to take longer to show results.
But
they're really important for their long-term success.
Totally agree.
If they can keep coming up with great new products and get better at predicting demand...
they'll be in such a strong position.
Right. They'll be able to keep inventory at the right levels, reduce waste, and really be able to meet their customers' needs.
It all makes them more profitable and more resilient.
Which is what investors want to see.
Especially with how uncertain the economy is right now.
Totally.
We can't ignore the risks either.
Yeah, that's true.
Things are still pretty shaky out there.
And you never know what challenges might pop up.
Right.
But 3M does have some things working in their favor.
Oh, yeah. Like what?
Their balance sheet is strong. They're generating a lot of cash. And their business is really diverse.
That's key.
They're not overly reliant on any one market or product line.
Right. It helps cushion them if one sector isn't doing so well.
Plus, they have that stake in Solventum.
Which gives them more flexibility.
Exactly. There's like a safety net.
Okay, so they're making progress.
Financially sound, diverse business.
But what about their potential for growth?
Yeah, that's the big question.
Where do you see things going?
Well, I think there are a couple of things to watch closely.
Okay.
First, their organic growth efforts.
Right. Can they really make innovation a core part of their business?
Exactly.
They've set some big goals.
But it's all about execution now.
Totally agree.
The second thing to watch is acquisitions.
Oh, interesting.
Right now.
They're really focused on improving things internally, getting their own house in order.
But once they've done that...
could we see them becoming more acquisitive?
You mean buying up other companies?
Exactly.
That would be a big shift.
They've talked about selling off some smaller businesses.
Well, what about acquisitions?
Could they make strategic acquisitions?
To build on their strength.
Or even move into new markets?
It's definitely possible.
And if they can combine that operational excellence with smart acquisitions,
that could really fuel their growth.
Something to keep an eye on for sure.
Definitely.
All right, so for our listeners who are thinking about investing in 3M.
Or who already own shares.
What are the key takeaways here?
I think the biggest takeaway is that 3M is changing.
They're undergoing a major transformation.
And it seems like they're making real progress.
Yeah, they're focused on operational efficiency, innovation, and giving back to their shareholders.
Financially, they're in a good place.
And their business is well diversified.
There's potential for growth, both organically and through acquisitions.
I think that sums it up nicely.
And I would add...
it's important to remember that this is a long game.
Yes, this kind of transformation doesn't happen overnight.
Investors need to be patient.
And give 3M time to execute its plan.
Absolutely.
But the early signs are promising.
And if they can keep delivering on their promises.
I think 3M could be a good investment for those who are willing to stick with it.
I agree.
And one last thought.
Okay.
keep an eye out for 3M's Investor Day in February 2025.
Oh, right. Why is that one so important?
That's when they'll give a more detailed update
On their long-term vision and strategy.
so investors can get a better sense of where they're headed.
Exactly.
It'll be a must-watch event for anyone who's interested in 3M.
All right, so we've really gone in depth with 3M.
We have.
Looked at them from every angle.
But before we finish up,
I want to bring it back to our listener.
one's thinking, okay, this is all great.
But what does this actually mean for me in 3M stock?
That's the big question, right?
And I think the really interesting thing here is the contrast
Okay.
between their short-term moves and their long-term moves.
What do you mean?
Well, in the short term,
They're okay taking a hit, like
Yeah.
with that portfolio prioritization thing.
right?
They know streamlining can mean some bumps in the road.
Yeah, that's not always easy for investors to swallow.
No, especially those who are obsessed with quarter-to-quarter growth.
Exactly.
But 3M is showing us that they're playing the long game.
And that's where those long-term initiatives come in, like overhauling their R&D.
If they can become known for always having innovative products, that changes how people see them.
It's like they're trying to shift.
From being this dependable, but maybe a little boring company,
Right, a little stale.
to one that's exciting. Again, a leader.
Yeah.
And if they can do that,
And also improve their forecasting at the same time.
so they can avoid stockouts,
Exactly.
better inventory management, meeting demand more efficiently.
That means higher margins, which investors love,
Of course.
but we can't pretend there's no risk.
Right, we got to talk about that.
The economy still isn't great,
Mm-hmm.
and 3M will feel that.
Yeah, that's true.
But
They have some advantages that help them out.
like what?
Well, the sheer variety of their products is huge.
Mhm.
So if one sector takes a hit,
They have others to fall back on.
and their balance sheet is strong,
Yeah, and their cash flow is good.
like shock absorbers when things get rough.
Exactly.
And let's not forget, that's Solventum's stake.
Oh, right.
It gives them options.
It does.
Okay, so they're making progress, financially sound, diverse business.
Mm-hmm.
But,
Here's something I want our TalkTickers listeners to think about.
okay, lay it on me.
We talked about how focused 3M is internally right now.
Right, fixing operations, innovating.
Exactly.
But once they feel like they've gotten their house in order,
Mm-hmm.
do they change their approach to mergers and acquisitions?
That's a really good question.
They've talked about selling off some smaller parts of the business.
But what about buying other companies?
Could a leaner, more efficient 3M go on a shopping spree
Imagine them snatching up companies.
that fit in with what they're already good at, or
Yeah.
even going into completely new areas?
It could really change how much they grow over the next few years.
It could.
Definitely something to keep an eye on.
Absolutely.
Okay, TalkTickers listeners.
We've given you a lot to think about today.
This deep dive is just the beginning.
Right? Do your own research.
Keep an eye on those key numbers we talked about.
And remember, 3M's Investor Day in February 2025.
That's going to give us a much clearer picture of where they're going.
So until then, keep those TalkTickers antennas tuned.
Stay curious.
And as always, happy investing.